Good afternoon, everybody. Welcome to the 13th day of our 60-day trading challenge. And today was a good learning in terms of we made a blunder in the sense it was a manual error, which I will talk about it. So while we take all our trades generally through Algo, but for this exercise of 60-day trading rule-based trading challenge, we are doing it manually. So just wanted to emphasize on when we are taking a manual trades, how important that every detail needs to be taken care very effectively, efficiently, and otherwise, while the strategy is good, execution, if it is goes wrong, then it can lead to kind of a adverse result. So basically, like if I look at the today's setup, came at basically I'll just show you I'll start sharing the screen. Okay, so now if you our first trade was 22,200 put. That means our view was the trade was supposed to go on the upside. The market was supposed to go up. The first at 9:30 itself we got the confirmation that market is likely to go up, but we completely went wrong in the selecting the strike price, because day after tomorrow, that is on Thursday, is a trading holiday, and hence the weekly expiry is tomorrow. So generally we avoid, not necessarily always, but generally by and large, we, depending on the market scenario and depending on the premium values, our rule says most of the days, a day prior to the expiry, and on the expiry day, we generally trade in the next week instrument, not the current week instrument. And but here by mistake, we took the current week selection, and as soon as we entered into the trade, we sold it at 70.20, and we have set it up our stop loss as soon as we take the trade. We had set up our stop loss at 105.30 and hit our stop loss soon after we took the trade. And then you look at it went further up and other things, like it would have disaster if it had continued. So we ended the trade at 105.30. We closed the trade. So I'll show you the order also. So 22,200. So here is the trade. The 70 rupees we sold, and then the stop loss got order triggered over here. We ignore this 22,200. This is the other strategy where we have made money. I'm not talking about the P&L, but just for your information, this is a buying strategy where we bought at 416 two lots, and then we sold at 470 and 494, etc. The whole, we can ignore this point, but the whole point is we booked the loss here. And then we went into the 22,000. We next trade was 21,300. It got triggered once we closed the trade. At around the 10:45, the trade got triggered, and we were a little bit more conscious. We did not wanted to take as soon as we noticed the trigger. So we took a couple of minutes this time, once bitten, twice shy kind of a thing. So we executed this at 10:48, and we sold the 21,300 put at 99.2, and then it is almost at the end of the day. We closed it at 60 rupee 40 paisa. So just for the quick walkthrough, this is the first trade where we stopped out, and the second trade you see here. This was our entry, 99.2 at 10:45, that 10:45 candle closure, but we entered around 9:47 or 9:48. And then after we entered into the trade, it never went above our price, and it was always below. Initially, we had put the stop loss obviously at a 50% of our sold price, and then we were trailing the stop loss. Once after 1:30 p.m. we started trailing the stop loss, because the other criteria was supposed to we were to trail the stop loss once it hits the 50% of the premium at which we have sold. But that did not happen, but we trailed based on the time. So at 1:30, see, this is the low of the candle is around 59.25. Based on that, we had revised our stop loss at 88.80. But again, this trailing stops will also did not trigger. We ended that day. So ultimately, our day ended in profits. Like, it's not about again a profit or loss, but we, as I always say, it is about the sticking to the rules. So our first trade for the day is we entered at 70.20 and then exited at 105.3, which means we booked a loss of 2,690 rupees here. And in actually the second trade confidence was low, to be very frank. I will put it as two. I have explained already here. And then in the second trade, we entered at 99.2 and we exited at 60.4. So we made a money of 28.51 after removing the trading costs. Again, trading costs are obviously we are taking from the Zerodha margin, sorry, brokerage calculator. So we ultimately it is not about we ended in the profit is not the point I want to drive. The point is there is a good possibility that when we take the trades manually, there can be errors possibility. So we need to be extra cautious and very careful in terms of when we take the trades. In spite of having a robust strategy and other things, if the execution goes wrong, the results can be completely, devastating. So that's all I just wanted to convey through today's learning perspective. As always, please do go through the trading journal which you have shared, the Google Sheet, where we have captured the learning detail as well. And thanks for joining today. And then tomorrow will be our fourth trading day of the 60-day trading challenge. So do join us. To learn and grow together. Thanks and bye bye. Take care.